G'day traders, Stacey Burke from Stacey Burke Trading, and today just going to review real important aspect of higher highs, higher lows, and breakout trading just in relation to the hourly charts. But we'll also look at this on the daily charts and how this same principle can be applied. Now we've talked about using the Asia close. We've talked about using previous levels, highs and lows. But the importance of breakout trading, and there's a bit of a misconception, the majority of breakout trades fail, and that is correct. And the question people will often ask is, well, how did the turtles, become so successful? Well, often the turtles were willing to take a lot of small trades and take small losses and then pyramid into their trades when they had certain behaviors after they broke out in terms of the average range that they moved, how to manage their stops, how to exit their positions. But I just want to highlight again sort of the Monday to Friday cycle of currencies, and just even in the daily cycles and monthly movements. So your average true range of an instrument, for example, the pound is around 450 pips. Let's take, just for say, I'm not accurate on that. Actually, we'll take a quick look. We'll look at the monthly ATR here, and we'll just put in the average true range for the last 14 days, and we'll see that the market roughly on average is somewhere around the 600, we'll say, just to sort of that mid-range, 575 to 600 pips. So we know that when the market moves on month per month, like if this was these are monthly candles, the average range right now is anything to 5 to 600 pips. So if we look at that same indicator on a chart, again, I should have left that on there, but we'll bring it back up. The last 14 weeks, the average range sort of is in that 300 pip range, somewhere in there, 3 to 350. The daily range, we're sort of down around that 100, probably 125, 1 to 125 pips. So when we look at the hourly charts, if we know that the average range for the pound, for example, is around 100 to 125 pips. So this is a Monday. So we've started the previous week off. This is Monday. I use the 8 o'clock candle on the MetaTrader charts. The 8th hour is the Asian close, and the 9th hour is the London Open. That's just where I find that my experience has shown me that the Asian market's closing and London's opening. But one of the things we talked about is looking at the Asia close. Now, this was Monday. So when we see these tails coming up, like we'll mark off the 8 o'clock candle. I've said I don't often trade on a Monday, but again, these are days where I'll look at the market to see how it's trading in relation to Friday. So if we back that up a bit, and we just even take a look at Friday's chart, Friday's bar. So we've got a high and a low from Friday. We've got 50% of the range. If you don't know much about 50% levels, we'll talk about that later, but the market opens up. So it gaps down short, but breaks out within the Asia time frame. So we've got a breakout. We have a pullback, and at this point when we get the bear candle, we don't know yet if that is a continuation, although it looks like a weak follow through. But as soon as this bar closes above, the bull bar closes above the bear candle, we now can look at this as a pullback. So we have a breakout, pullback. We get the following smaller bear bar. We have a doji and then an inside doji, which is the Asia close. Now we talked about this in one of the other videos. Smart traders would have used a 1-bar stop, potentially a breakout stop, or used the previous bear candle as their area to place their stop, or they could even use 1 ATR, which in this case is roughly around 35 pips. But my point with this is just that we know that the market has come out of a previous breakout from Friday's high. It's retested that and broke out on Friday from the Thursday high, and on Monday we've had the gap down retesting the 50% level. But we know once this continues on, even if you didn't trade the breakout, once we have the London open, it's triggered longs. We've got a breakout pullback again. You have an opportunity now to measure the range from high to the low of London to look at the potential for how much movement is there in terms of risk reward. Now, oftentimes, as we've talked about, we might look to measure the range and then extrapolate that out. Now, something we haven't talked about, which Bill McLaren talks a lot about, is that most false breaks occur at the 25% level. So if we were to just put the fib on there, it's not really fib levels, I've got it at 50%, but we'll add in 25% and see where that shows up on this chart. It's 25% extension, and you can see that the market hit that quarter extension of the previous Monday's range. Now, if we just go back, and we'll get rid of all this just from purely a breakout pullback exercise, what we're looking for is breakouts and pullbacks. So again, on the Tuesday, the market clearly broke out past where these wicks before had experienced selling. So now we have a breakout. And again, there's our Asia close. Now, traders who position themselves in here, again, at a minimum, I would be looking for at least a 100% extension of that range of this bull candle. Now, it didn't quite get there. Pretty close, didn't quite get there. But my point with this is when we saw the heavy selling come into the third hour of London open. Okay, so we've got our Asia open, we've got a breakout. Breakout traders may have positioned themselves in here. We've got this strong bear candle showing up at the 5 a.m. New York time. Now, again, we know that between 2 a.m. and 5 a.m. in a high percentage of times will often show a high or a low for the London session. So at any point between 2 and 5, if I saw that there was potential for heavy selling come back in, we would either look to exit the market, take profits, or move our stop to break even or to tighten it up. So just when you see price action like this, be aware, 2 a.m. to 5 a.m. New York, the market could be showing a high or low for the session. We've saw selling and two-sided trading coming in here. Into the U.S. session, we saw that market reverse. Now, I'm not sitting here hour after hour. I'm just giving traders from different time frames key points to be looking for with breakout trading and with the time of day. So the market closes, we go into Wednesday's session. Now, at this point, we've seen the market have a false break, come back strongly into the Monday's range. We've got Monday's low somewhere over here that we can project. Wednesday opens up. Now, again, the third hour of Asia, we get a wick. It tests the low from Tuesday. Again, there would have been breakout traders trapped. That's not what I would consider a valid breakout, but again, we're not trading Asia. We're looking to trade the Asia close, London open. So we see the Asia close. We see lower tails, lower highs. The market now is showing us a possible continuation pattern or a squeeze play if you had a moving average on there. So breakout traders may have either positioned themselves for the break of that candle and again having a 1-bar stop, or position themselves at market. We already know that breakout traders are trapped, but anybody who traded that market, if their stop was above the day's high, they're still in that trade. If they had gone to break even after that trade from the early Asian breakout, they probably would have been stopped out. But we know that breakout traders, there's been no retest of the highs of that session. The market breaks out, continues strongly into the London Open. Now again, here's our 5 a.m. candle. Now again, as I said, between 2 a.m. and 5 a.m. in a high percentage of cases, the market will have a high possibility of establishing a selling area high or a buying area low. So the 6 a.m. candle forms a low before it starts to reverse, but again we have our buying area low that held for the rest of the London session. So again we had a low at London 5 a.m. at 25.89. The market into the US Open went as low as 69, so another 20 pips lower, but again you can see there was no closes below the low of that range before the market auctioned back up into the breakout of the London market. So again, we now have a market that's broken out of Monday's range, and again, just for fun, we'll look at the range of the quarter levels from Tuesday. So we've got a just 1 3/4 extension, not quite just beyond 1.5. But if we look at Monday's range, interestingly enough, we see that the again that failure was around the quarter extension. It did go 1.5 as the full range, 1.5 extension of Monday's range. So again, just important to understand range expansion, especially if you're setting profit targets. Just another way, for example, when we have the market break out of a range and move strongly, it has a high possibility of reproducing a measured move of one range to the next. So just be cognizant of that. And again, we talked about average true range. You know, the average range for the pound was around 1 to 125, so you can get an idea once the market's moved, either where we see two-sided price action or where the market may potentially be time-wise. Again, 2 a.m. to 5 a.m. New York is a time where London may set a high or a low for the session. And again, the Asia close as we head into the London Open and US Opens. So we go into the next day. We come back inside of retesting Monday's range. The market finds some resistance off the breakout from Tuesday. We go to the Asia close. So again, the market has broken out from the US session. Continue that into the Asian Open. We have a pullback, no breakouts, no bear breakouts in the pullback, but we have a large pullback into the London Open. The market, that's a fairly large candle. You know, we're back inside of the range, but we also have an area where the market broke out on Tuesday once it tested that 50% level of Monday. So again, just looking to I'll get rid of this and we'll use the fib just to give you an idea. If we go 50% on Monday, and you can see the market tested the 50% level from Monday. So these are all little things you can constantly be looking for, but again, interestingly enough, we have our 5 a.m. candle at London, and again we have now set our selling area heading into the later part of London into the US Open, and we saw that market move, 150 pips very strongly. So again, just taking out the low of Wednesday. So important, breakout pullback, know your times a day. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.